NIIT Technologies ended FY19 on a strong note, although its performance in Q4 FY19 was weaker than expected due to several one-offs. Business outlook remains bright and the management says committed under the new private equity promoter Bearing Private Equity. Let's do a three-point analysis of the earnings fine print and what's the outlook on the company. 1. What were the key positives in FY19 earnings? Well, the company delivered a robust FY19. Revenue in rupee terms grew 23.5%, while in constant currency terms, it grew over 17%. Operating margin improved 90 basis points to 17.3%. Key verticals, namely insurance, banking, financial services, as well as travel and tourism, showed healthy growth. Now, the company added 11 new clients in the quarter gone by and 40 in the fiscal. Order inflows gained traction, with the company bagging orders worth $170 million in Q4 FY19. The unexecuted order book at the end of FY19 stood at $390 million. In FY19, the company bagged a total order of $646 million, up 27% from the previous year. The share of digital revenue stood at 30% at the end of March quarter and showed a growth of 45% year-on-year. The management did not signal any overt macro concern impacting the business as of now. 2. What are the key concerns for the company? In Q4 FY19, revenue in rupee terms was sequentially flat, while revenue growth in constant currency stood at 1.3%. Weakness in revenue growth was due to a deferral of a contract in the insurance segment. Q4 is normally the strongest quarter for geographical information system business, but this fiscal, the same declined 13% sequentially due to imposition of the Model Code of Conduct before the general elections, which impacted government procurement as well. Margin took a big hit. Reported margin declined 50 basis points sequentially owing to weakness in GIS, insurance and rupee appreciation versus the dollar. Now, there was also a one-off impact due to M&A and royalty tax in Australia. The divestment of India GIS business and Q2 integration of latest acquisition of Wishworks might result in revenue softness in Q1. The company will implement a wage hike in Q1, so the near-term performance may be uninspiring. Attrition, while not alarming, has risen by 50 basis points sequentially. The management, however, has reassured that there was no senior level exit and it has in fact added 2 senior executives in the quarter gone by. Demand environment remains healthy, but supply of skilled resources could pose some of the challenges going ahead. 3. What's the outlook on the company? NIIT Technologies has strategic clarity in terms of its focused verticals and geography. The new promoter, Bearing Private Equity, is likely to drive growth. The management has seen no adverse reaction from the clients or employees so far due to the ownership change. And with the open offer priced at 1394 rupees per share, it limits the significant near-term downside as well. Investors could wait for currency appreciation linked downside to gradually get into the stock.